Good evening. This is the Elliott Wave update for the S&P 500 for Thursday, May 19th, 2022. Markets continue to churn through their current positions and their current wave counts fairly accurately. I think some of the results in terms of the reaction seem to be a little bit extreme at times, but still falling within parameters that are within the Elliott and the Fibonacci parameters for each of these moves. So I think while the characteristics and personalities of these reactive moves can be sometimes extreme, it still fits. And what it also tells me is that the volatility is still high and it increases in both directions. And even though we're seeing like the VIX itself, the VIX future drop, 13 cents, I think it is today. And the VIX itself dropped, actually that's $1. The VIX was down 161 as the index. And that's fine because the markets really put in a fairly decent rally in some of the areas that actually get marked down. And tomorrow, of course, is an expiration. So again, we're in line, starting here on the daily chart. I don't have any changes. I've just added, just for tracking purposes, what I believe to be the sub-minute wave one, because we're just tracking 5 down, 3 up, and then we're just going to keep following it until we reach our conclusion. So we're still on track. And I would be looking for actually additional downside, but taking it down to the hourly chart, we can take a look inside. First of all, off of this high, which is 4,095, we have a 1, 2, 3, 4, 5. That's that sub-minute wave one. Then we get a 3-wave sub-minute wave 2. And that one could still be in process as follows. We get a 1, 2, 3, 4, 5, and it kind of is triangular, a whole bit ugly, very fit and start and fit. And then we get an A, a B, and we're doing another C wave up. If we get that C wave up, we will continue. This would be for the downside move, actually, all the way down. And I kind of want to leave that there for right now. But I want to take a look at some of the internals in here. And we're also going to be drawing with, let's use that as the high, and that's 2, and this is 3. And if that, 2, and that's A, and this is B. If that's the case, we can still remain below 4,000. And that would be a task, being that the 200 hourly 200 moving average is at 4,012. And we have additional Fibonacci resistance just under 4,009. So that whole zone really would be anticipated and expected to hold any stronger upside that the market may want to produce tomorrow as we move through our expiration cycle. Don't forget that usually can and become really fair play within the big Titan tech stocks. And right now, that fair play is going to be in Apple. It's going to be in Amazon, Facebook, Google, Microsoft, Netflix, NVIDIA, Tesla, Twitter. They're all in play. They all have some backing of news or just performance or their own separate wave counts. Apple has been getting its tail kicked. And a lot of it is coming because of what's happening in China, what's happening to the Chinese economy, the numbers that are coming out, the supply chain, the retail markets getting their butts kicked. And it shouldn't be a surprise, but it is, because actually the markets continue to hold these, like Target and Walmart and a lot of these other stocks, as they're getting ready to report, they're holding them up too high. I'm not sure why people would not expect the balance of the retail sector to kind of come in going like, yeah, we're feeling the sting. We're getting the sting of the inflationary pressure. And with that in the market and finally getting filtered in, we will continue to work through this third point of recognition point. And we're getting ready to drop into its largest. So we're in the third. Now we're going to drop again in the middle section of this third. And so it should be quite dynamic, similar to what we just did. In fact, it should be larger than what we just did. And that would have been off of that 4,095 high that we made Tuesday to Wednesday. Actually, I think at the start of Globex on Tuesday evening. So downside still expecting. First, though, we got to get through tomorrow's expiration, and that kind of, we're leaving open the potential for this market to again swing up and end up above today's highs, which are coming in at 39.43, I think. Yeah. And we have some resistance there. We've got the 50-day moving average on the hourly at 39.50. And then we have 39.58, 39.76. That is where, if indeed that we're going to get a C wave up, it would be equal to the A wave, most common. So can we rally from here and get ourselves back up there? Yeah, we could. It would be one heck of a rally. But again, we've seen it. We've seen them drop at 150. We've seen them take it up 150. So right now, everything's open game. And we have additional resistance all the way up here at right at 4,000, just above 4,000. I actually would not be expecting that, but stranger things have happened. And if we find that in Asia and China, they get the ball rolling, what's left for the US to tack on may not be much, and it could get there. We shall see. Now, if downside continues to kick in, and we don't get much of a rally back up off of these levels, and we're starting from a lower position, and it breaks, and it starts to break, it would need to break 38.55, which is the existing low, the end of that subminute wave one, which we got this morning. So we got close. We got close. We got to within a buck of moving to a new low. That's how far down this sucker went. But I'm not, of course, we have to open the possibility that we could go up and swing back above all of this and kept this little bit larger wave two going. Like, no, it came down and put 5 down. So that put the sub-minute wave one here. But we're still now in another wave two, but smaller, much smaller. So you can see that this was smaller than the one previous. So as we go down in degrees, so do the size of the bounces. So for tomorrow, if we are going to continue to break down, it has to break here, but not stop. This time it can't stop at 38.55. It cannot consider it support. It's breaking it. And we don't really have a whole lot underneath. We get to 38.15, 37.76, 37.40, 36.43 might be a stop for the subminute wave three. Maybe, I don't think so. But we have 35, 37, et cetera. So 33.65 now rounds out to where this centerpiece can come in, get a rally, come back down, and then finish that, and then get another rally, come back down, finish the next one up, and next one up. So it's going to take us a while. And we'll keep filling in the blanks in terms of Fibonacci as it progresses. Okay, so for tomorrow, depending on what happens now, we've got 2 continents to get through. We've got to get over to Asia, and then we've got to get over to Europe. We'll reopen Globex here in about 9 minutes. That, I think they'll hold it to push it higher, I believe. Right now it's being marked slightly lower. And that could come because, again, we got a few additional reports, earnings reports, they continue to show some weakness across the board. So we'll see. We got both sides covered here, but it looks like we might open just a little bit higher. All right, so that's it for today. Continue to use the moving averages, the Fibonacci, the Elliott. Follow the price action. Our next update will be on Sunday, May 22nd.